Before we start, I promise you I am not checking the price of Bitcoin. I just have my notes here in front of me. We have a really interesting panel for you today. Everyone wants to know, where are the investors putting their money and what are the investors looking at? And I have an esteemed collection of panelists with me today, all most in the investment space in Web3. And I really want to find out where they're putting their money and what their views are. But before we dig into the VC trends and the investors' perspective, we can start off with a few introductions so you can get to know our panelists a little bit better. And I think we can start on the left.
Hi, William Balbine, Managing Director at Orbit Startups. We just rebranded, so assume you've never heard of it. But I'm also a general partner at our fund within our family. It's SOSV. So we invest early stage, we help with our program, and then we follow on. So in terms of blockchain investing since 2015, it's about 15% of the investments that we do globally. And happy to be here. Thank you.
Well, thank you so much. I think we have the toughest panel after lunch, so I hope that we can wake you up. My name is Augusto Cardenas. I'm heading international operations at Abu Dhabi Investment Office. Basically, we serve as a platform for the Emirate of Abu Dhabi to, attract companies to establish, to operate in Abu Dhabi, but also work with them in order to grow from Abu Dhabi.
Brilliant.
Cool. Hi, everybody. I'm Jason Fernandez. I'm co-founder of Adlunam. Adlunam is an investment platform. So what we do is sort of help companies in the lead up to the IDO round. So that includes sort of usually in the 2 or 3 months in the lead up to the IDO. That can be sort of advisory services, marketing services, but mostly sort of like getting them ready to have a public sale. So a lot of our focus is we have an engaged churn NFT platform. We sort of calculate engagement and we ensure that the most engaged people have access to allocation in these projects. That's our focus.
Nice. Hi everyone, I'm HIMANSHU. I'm the founding partner and CIO at Woodstock Fund. We are a Web3 native fund, venture capital firm. We invest anywhere from pre-seed to up to Series B rounds across the entire Web3 stack, from your application layer to your settlement layers. We have about 65 portfolio companies, and we are essentially trying to build what we call this East to West corridor. So take our presence from India and the Middle East and help the projects get a global network access and back the best founders from the Western markets and help them access the markets on the Eastern side of the world.
Brilliant. So for any startups in the audience, now you know who you need to be hounding. Take your pictures and find them after the panel. And then just to introduce myself, I'm BRENTON. It's such a pleasure. Thank you so much for all being here today. We run an early stage Web3 fund in Africa, which is quite interesting, as well as an ecosystem business. Really focused on real world use cases, specifically for emerging markets that are being solved with this technology. But let's kick off today with probably not such a great point, but if anyone's been following the venture space over the past few months, it's been very tumultuous, all the way up to the closing of Silicon Valley Bank, or the failure rather, recently. But looking at the space in more general terms, we've seen this massive sort of compression of venture dollars and deals being done, specifically in the second half of last year. I mean, to touch on a few points, we've seen pretty much almost the best venture startup being Stripe at the moment take a 50% write-down in their valuation. Peter Thiel's Founders Fund split their fund into two. Tiger Global has taken, I think, a third write-down in their books. And we are, after all, VCs. We just focus on a specific technology. So I'd love to hear from our panelists, how do you feel that the general VC trend is affecting things in the Web3 space, and do you think we'll see this spill over of massive compression in terms of the number of deals done, the value of the deals done, the valuation of startups? And to kick us off, we'll start with the team from Woodstock.
Yeah, so extremely interesting times. I think what has happened over the last 3 years, pretty much since the pandemic, is a pivotal change, right? And especially with what we are seeing with the banking sector, it's ringing alarm bells around the world. And essentially, a simple way to put it is, we are going to see a new form of quantitative easing. It's just being termed as bank term funding program right now. And what Fed did after pandemic was inject a lot of liquidity into the system. The banks got a tremendous increase in the deposit base, and they lent out those deposits to the long-term bonds and treasuries, right? And suddenly Fed pivoted at last November, and they started increasing the interest rates massively. As a result of that, most of those long-term bonds and treasuries are not going to be profitable anymore. So all your banks that are holding long-term bonds and treasuries are in a very, very difficult position right now, because most of them have losses on their balance sheet and not enough liquidity to support what's happening in the banking system. So I think over the next few weeks, and I think most of you would have also seen the bet that Balaji Srinivasan made recently around hyperinflation of USD and 1 million Bitcoin target. Obviously, that's a bit crazy, at least in my honest view, but the alarm bells basically have been rung, right, in terms of how we can potentially see a much larger collapse of the banking sector that's going to follow in the coming weeks or months. Now, when it comes to specifically to digital asset space, it's a very interesting spot to be in, because on one hand, we are seeing what we saw in 2007, 2008 financial collapse, banking sector collapse, but potentially to a much, much larger scale today with the kind of liquidity we have tied up with the banks right now. And there's a good argument to be made that the digital asset space is potentially going to decouple over the next few months or quarters. And the simple reason for that is once you are taking liquidity out of the banks, you are going to put it across your money market funds or potentially your hard money, which a lot of people consider Bitcoin to be, right? So it's very interesting to see how the next few weeks and months pan out. I think we have a much larger problem at our hands now, and digital asset space is potentially well placed because you are moving away from any counterparty risk with your third parties, banks, etc., to just a market risk and a self-custody risk with the digital asset space, right? So I think we could be in for a very volatile next few months, and it will be very interesting to see if we eventually start to see some sort of a decoupling of digital asset space with the larger markets. Coming to your question, Brenton, on the venture capital side of things, I think this is a good time if you are a venture capital firm which have the funds to deploy in the space. Because what has also happened is we saw a mad flush of capital in 2021 in the digital asset space, right? And a lot of projects and founders raised funding in 2021 for a 12 to 18 month period, sort of assuming that funding will always be easy. And most of the startups are now reaching a point where they are about to run out of capital, right? So you are going to see in this year a lot of churn that is going to happen, a lot of failed startups which could not deliver the products going to get shut down, and a lot of good teams which have actually built good products starting to consolidate and capture the market share, right? So if you are in the right spot, evaluating the right teams and products, I think over the next few quarters, you'll get some great opportunities to invest across the space.
Brilliant, I definitely agree. And Jason, traditionally when we speak about the VC space, we're looking at equity, but you've got a very interesting position, working very closely with companies in the IDO space. How has what's been happening in the venture space affected the token fundraising model? Have you seen valuations compress? Has there been more a sort of attractiveness towards token fundraising models? What is it that you're seeing?
Yeah, so I think it's fairly simple. I think it really comes down to just access to capital, right? So as the Fed tightens monetary policy, there's just less money in the system. So that affects what we consider speculative assets, or what at least retail investors consider speculative assets. So tokens have always been considered sort of speculative. And there's probably a good argument to make there. And we see a lot of valuations have been going down. And that's unfortunate because I don't think it makes sense to look at valuations from a perspective of like what is a market willing to bear. It's more from a perspective of how quickly can this company grow and provide value to the token holders and the investors, the people who invest in the token. So I don't think you can really determine a valuation based on market conditions. I think that's a dangerous way to go. And I'm certainly seeing that. A lot of the companies that we advise, a lot of the companies that come to us, I think we have like 48 companies that are looking to launch. One of the things we see is that nobody wants to launch, right? Like no company wants to launch. We have like 48 projects that are just sitting around waiting for the market to start turning. And that's not really going to happen until the Fed eases up on monetary policy. So I think like this is the knock-on effects of contraction of the monetary policy. We see SVB fail, Signature Bank, pretty much the same thing. And we'll see, as there's less capital in the industry, you're going to start seeing, tokens get depressed. One of the things I noticed is Circle. There's a lot less liquidity in terms of stable coins. So USDC is much less liquid than it used to be. I was speaking with the CEO of XRX Exchange the other day. They partnered with Circle. They also partnered with Bitfinex for USDT. And both these stable coins are just do not exist with the kind of liquidity that it used to exist. So whenever you have massive, disruptions in liquidity, that's gonna have an effect on the price of tokens, and that's gonna have an effect on people putting in money in tokens. I'm actually surprised that Bitcoin is pumping when you have USDT and USDC massive liquidity issues, but it's happening, and I think that's a good sign. And I think as you have greater liquidity in the system, you'll see Bitcoin and all these altcoins pump. But from an IDO perspective, I don't think you're going to see a big change in that until the Fed starts easing up on monetary policy.
Brilliant, brilliant. And then just before I come to Augusto and regulation, Orbitz has a slightly different view because they get a good overview of both things in Web3 as well as things in deep tech. So are you seeing any differences between the sectors in terms of how the VC market's being affected, or is it generally across the board?
Yeah, so I guess one of the benefits of being old is you've seen a few cycles, right? So I've been doing tech investment 26 years, and there's lived through a bunch of crypto cycles as well as traditional cycles. So for us, as early stage VCs, we kept on investing. So 2020, 2021, actually we did not invest in blockchain that much because we're very flexible, but one thing that we can't do is we can't chase valuation based on our model. So we have an ownership target, and we invest a certain amount, right? And we need about 5% of the company. And we're equity, but we can't buy tokens, but we take tokens for our program. So for Q4, basically the model bottom dropped out of the market. Normally we're number 4 most active VC in the world. For Q4 we're the most active VC in the world because we kept on investing. And so last year, after 2020, 2021 doing almost nothing, we did about 10 investments in the Web3 space because things are a little bit more, shall we say, normal. So for VCs, it's a very good time. Just think buy low, sell high. And we're very long term. We're 10 plus 3, 13 years. So we think it's a great opportunity. But for investors and also founders, you're there to solve a problem or to attack an opportunity. Tokens, frankly, you should probably just not follow it. Just build something that really helps the world, change the world for a better place.
Brilliant. And then giving us a unique view, Augusto, from the regulatory perspective, how has this sort of affected Abu Dhabi as a region and more in general your approach towards the space? Has it made you more cautious, or is it just, like Orbit says, just traditional market cycles?
Yeah, no, I think, and I agree with all my colleagues here on the panel, because it's not a secret that we are living in turbulent times, right? And this is a consequence of all the last 4 or 5 years I described before. But I think it was mentioned something very important, which is right now, the venture capitals and the sovereign wealth funds are living an unprecedented demand, right? Especially here at the Gulf. When you look at the world right now, maybe the Gulf is one of the fewest regions in the world that is abundant in capital, right? And therefore, the companies are coming here to raise that capital. So I guess when they come here, it's not only the availability of capital, but also what has been built across the regulation. And in the case of Abu Dhabi, it's a very unique regulation because what they have done in Abu Dhabi Global Market, in ADGM, is first they have taken the English common law, so it's a special legal framework that works only under the English common law. But secondly, they have taken the physical legal framework and they have translated in a digital legal framework. So actually you have a regulator that is happy and eager to work with each one of you. So they have created this, digital lab where basically the companies can test their product, can work hand to hand with the regulator to see if that product can be regulated, right? And what is the best way to regulate that product? So it's not what happens in other places of the world where the regulation goes one way and the private sector goes in a different way. Here, they goes hand to hand, right? So I think, yes, it's about the abundance of capital, but also what the ecosystem has built in order to think in the long term. Because what the VCs are thinking is not just in a short-term, deal, but what is going to happen in the next 10 years, what is going to happen in the 15 years. And I think that's the vision that the startup should have in mind. What is the skin on the game that they're bringing to the ecosystem? What they are going to complement the current sector. And I think that's what the funds are looking at.
Absolutely, completely agree. So that was a little bit of a damper, but moving on to a slightly more exciting point. Specifically from a VC perspective, Web3 is still relatively immature when it comes to sort of exits. I mean, we've seen some exchanges, the likes of Coinbase. The last sort of bull run was characterized by DeFi summer. But we all know this is a very, very dynamic space. It changes very, very quickly. So, specifically over the next, 12, 24, 36 months, what are some of the themes specifically in Web3 that you're excited about or you see creating the most value? And I'm going to hand over to Woodstock to start off this one.
Yeah, so when we look at the Web3 space broadly, we look at 3 trends in the space, right? And this is part of the thesis that we have published on our website as well. So the 3 mega trends that we look at, it's convergence, financialization, and virtualization. When we talk about convergence, it's how are we going to see a convergence of communities, culture, economics, and governance, right? How will they intersect with each other, and what are the opportunities that will come out of it? When we talk about financialization, so essentially DeFi or decentralized finance has already shown us that the financial systems can be rebuilt without intermediaries, right? So now how is that going to really evolve over the next 5 to 10 years, right? How are we going to rebuild the existing financial system without any intermediaries in between? And when we look at virtualization, we see that the line between our real worlds and the virtual worlds is going to blur more and more, right? We are going to spend more and more time online. We are going to spend more and more time in augmented and virtual realities, and eventually when Metaverse starts to kick in, right? And we are very close on the virtualization side. I think we are probably within 1 to 2 years of a pivotal point on the hardware side, right? Because one of your tech giants is about to come out with a massive release on the headset side, right? And we are already hearing stories that Apple is probably less than a year away in terms of their AR/VR headset. So those are the 3 mega trends that we essentially look at, and then we look at how is the Web3 stack basically shaping up across these three mega trends, right? And across the infrastructure layer, across your settlement layers, across your middleware layers, and eventually across your application category, which are the projects that are doing and delivering the right things, right? So I can go into specific use cases that we are excited about, but we can probably touch upon that a bit later.
Brilliant. And then moving on to you, Jason. Any specific segments in the token investment world you see a lot of value being created in?
Yeah, so I've actually been through a few of these bull and bear markets, and one of the things I've noticed is that the projects that are hot in one market are not the projects that are hot in the next market, right? So in the last market, there was a whole bunch of focus on Metaverse projects. Metaverse, since Facebook had sort of changed their name, everybody was looking at what is the Metaverse going to go. So we see like Metaverse is just up the yin-yang, just everywhere, right? And so a lot of companies will invest in Metaverses. NFT Tech invests in Blocktopia, a few other companies. I think, what's going to happen now, I think you see the rise of AI with ChatGPT. And I think we're going to see the next bull market, we're going to see a lot of projects that integrate AI in a unique and interesting way. One of the projects I advise is a company called Project Lambo. They're Metaverse. And one of the things that they do is that they have like the non-playable characters, the conversations that they have are generated by ChatGPT. So they've actually integrated ChatGPT as a technology within their game, right? So I'm really excited about technologies like that. I'm like, how do you look at these companies that are more, that might be in a more traditional space in Web3, how do they integrate AI to sort of expand their offering and make it more compelling, right? And you can compare that to the AI companies in general, and there's certainly a lot of scope there for growth in the ChatGPT area. But I'm also very interested in seeing how like AI interacts with other areas that have been considered, interesting in Web3. So like the gaming aspect, the metaverse aspect. launch pads, more infrastructure type plays. How will AI start being integrated into that? Because now that ChatGPT exists, integrating that is significantly easier for companies that are already doing something else to sort of integrate that and to try to expand their offering. And so I'm really excited to see kind of how that's going to happen, and I think that that's going to affect valuations massively in terms of for companies that have successfully managed to integrate AI, even generative AI, in their core offerings. So that's what I'm excited to see.
Brilliant. And Augusto, is there any specific sectors? Abu Dhabi is seeing a lot of inflow in terms of incorporations. I know there's been a lot of funds, but are there any themes that are becoming quite evident?
Yeah, indeed. So maybe I will sum up in 4 verticals. The first one is democratization, right? And democratization in the sense that what we are seeing right now is all these new platforms that are including a population that is not using, the different applications and the different solutions. So that has been developed in Abu Dhabi to attend markets such as Africa, right? The Middle East, of course, India, and Europe, right? So that is one vertical. The other vertical, and based on what Jason said, is about video gaming and metaverse, right? So we have an ecosystem that is called Jazz Creative Hub, which is a state-of-the-art facility. There are 4 buildings, beautiful, in Jazz Island. And basically, that area is a free zone only for video games, metaverse, and media companies. So what you have seen there is a cluster that, are, of course, most of those companies are using blockchain technologies and Web 3.0 technologies. One third one is about artificial intelligence, as mentioned before. Abu Dhabi has a university that is called Mohammed bin Zayed University. That is a university that is focused only on artificial intelligence. So it's not just a faculty, it's a university, an entire university that has brought top-notch professors from all over the world and is focused on artificial intelligence. And that is, a game changer for Web 3.0 companies. And last but not least, which is digital identity, right? And with digital identity, I'm talking about healthcare, I'm talking about transport system, I'm talking about education. So if I will sum up, I will focus in these 4 verticals as the trends that we are seeing in Abu Dhabi right now.
No, I completely agree. I mean, I think we're seeing a lot of the same in Africa. And over in the orbit stable?
Yeah, sure. So I think just really back to basics, solve a problem. So when we started investing in blockchain fintech in 2015, we invested in 4 companies. Unfortunately, 3 died, but one of them was called BitMEX. So it was the first crypto derivatives exchange. And the idea there was solving a problem. Now, there's a lot of people who, the idea at the time was there's supposedly a lot of people, CFOs of major corporations, who are going to sell land mowers and take Bitcoin, right? So BitMEX actually started off as a platform for CFOs to manage their crypto assets. Unfortunately, that just didn't happen. So when we invested, we helped the company change and switch to actually solve a problem that we did see, which was people in Asia love trading currency. And because of some restrictions at the time, instead of having like a $1 million account with 70x leverage, they were cut back to $250K account with 20x leverage, and they were angry because they couldn't basically speculate on currency, which is a favorite thing for Tokyo housewives to do, apparently. But anyway, so we basically worked with the company over 3 months in our office. At that time, our program was in person in Shanghai. And we simplified the platform. So, I mean, this thing was more complicated to use in a Bloomberg terminal. It was impossible. So we just simplified it. And instead of focusing on CFOs, we focused on retail. And the company had been live for 9 months. They're doing $250 a week in revenue. That's it. But in 12 weeks, at the end of 2015, went from $250 a week to $11,000 a week in revenue, just by simplifying the platform and solving an actual problem. And this is, they were actually thinking about shutting the company down at the time. A few months later, they created the perpetual swap to solve another problem, which is people didn't understand the fact that contracts expire. So we had to make them not expire. So they were really angry because their contracts expired. They didn't know what happened. But just think about, bottom line, solve problems. So what we're doing now is we're focusing on how do you leverage blockchain to to open things up. So for example, insurance, it's boring, okay? It's purposely boring. It's supposed to be boring, right? You don't want excitement in insurance. And so the problem is that investing in insurance is closed. You know, it's Munich Re, Swiss Re, Lloyd's, or whatever. It's basically an old boys and girls network, mostly boys. And it's impossible to, as a human, like a normal human, to invest in. So, for example, we're invested in a regulated company that opens up insurance as an asset class to anybody. So it's DeFi reinsurance, but it's not, you're not really staking anything. You're basically investing in insurance policy as an asset class and, you know, making 16, 18% yield. So, you know, boring shit that makes money, fully regulated, because we had some issues with BitMEX there, but yeah, fully regulated. And so we're really focused on how do you, you know, open up financial products to everybody, not just the few and the big.
Oh, brilliant. And this one I'm going to pass over to Augusto. So look, whatever your opinion on it, you know, since the FTX debacle, Celsius, 3AC, the rest of it, we've seen a lot of regulatory scrutiny come into the space. And, you know, if you're a Bitcoin maxi, you're on the opposite end of the spectrum. And a lot of us in the space think regulation is great, but as someone with intimate knowledge, how has this increased regulatory scrutiny affected the space in your perspective? Is it good? Is it bad?
Yeah, and I think this morning I was in a meeting, right, with an investor from Israel, actually, and he told me something amazing about the FSRA, which is the regulator about Abu Dhabi, is that you drop an email and say, look, I have a doubt and I have some questions, can you give me a call? And they actually call you back, right? And this from a regulator is quite unique. And that's the idea of ADGM, because they have, I mentioned before, the sandbox, right? And the sandbox is that the regulator sits down with you, understand your solution, understand your technology, and find ways whether it can be regulated. And it's not a mature industry, right? So this is critical to develop the right regulation. So it's not just for the sake to regulate the industry, it's for the sake to regulate properly. And I think Abu Dhabi has gone 3-4 steps forward anybody else. It's a unique ecosystem of that. So at the end of the day, it's a regulation, but it's also a very strong economy. I mean, Abu Dhabi, of course, is very stable with all this turbulence. As an amazing talent pool, I mentioned about the Artificial Intelligence University. But at the end of the day, it's a government that is committed with the companies in order to grow with them from Abu Dhabi. And that is not just a cursory thing to say, it's a game changer when you're working with an industry that is maturing.
You know what, I just want a small anecdote. I think I completely agree. I love the fact that you mentioned it's not about regulating, it's about regulating properly. And a testament to that is every third person I've run into at this conference and the events I've been through at the last few days, I asked them, so what are you doing in Dubai, in Abu Dhabi? Oh, we're here to set up our entity. And I think it just speaks to you know, the quality of the regulators and the regulation that you've managed to bring out. But interesting, you know, we see a lot of froth in the first world markets. But we've really privileged to have Woodstock in orbit with us, who are very active in those emerging markets. You know, myself as well in Africa. And I'd love to chat to them about what are the use cases like that you're seeing in the Web3 space in those emerging markets relative to what we're seeing in the more developed markets like the US and Europe. And we can kick off with orbit.
Yeah, so I think one of the things that we're really focused on is economic independence. So the ability to work and actually make money and then have money to eat. It's pretty simple. So we do focus a bit on the future of work. We think that there's going to be a huge opportunity for jobs in and around Web3 space. So we've invested in a lot of sort of traditional education and work platforms. And it's a little crazy, but we also invested in Morpheus, which is a gig working platform for Web3, because we think there's going to be quite a lot of jobs there, from research to doing somewhat repetitive tasks that AI can't handle, to just, you know, if you throw a party, you want people in there so you can hire some people. But most of the people working on these in these platforms, you know, they're in Philippines, they're in Argentina, they're in Indonesia. and they can make double online versus working offline. So think about like Fiverr, but for Web3. So one area that we think is going to be very exciting over time is it's not just sort of, say NFTs that are cool or like playing a game or whatever, but there will be a real fundamental shift, as Woodstock said, like how people spend their time. And you're going to see some interesting opportunities around people having fun there, but also not just fun, but also working.
Brilliant. Well, India is a market I'm personally very excited about. But how are those Web3 use cases differing? Are you seeing a lot of the same sort of things, or what is it that you're seeing in the region?
So as William pointed out, right, I think economic independence is a huge factor. And when we look at the overall stats, almost half of the world's population is either unbanked or still has very limited access to financial services, right? And through blockchain and digital asset space, that's the first thing that we open up to all these people, right? Because your typical banking requirements of KYC, AML, and the checks they have to go to is just way overboard in terms of how strenuous that is. So just by enabling more people access to the banking services is a huge thing, right? Because we are talking about half the world, which is still like very limited access to banking services. And the second point is, when we look at the emerging markets, a large chunk of the population is in the low-income bracket group, right? And through the blockchain space, there can be lots of tremendous opportunities generated in terms of them contributing small tasks and getting proper incentives to earn a steady income source, probably on the side of what they're doing. And these can have very small applications, right? Jason was talking about AI space. How can you incentivize a large chunk of the low-income group population to train your AI and ML models better, right? And you just incentivize them, pay them $1, $2, $5, $10, whatever it is, to do those tasks that can help you train those models better. So when you look at the financial independence that you can generate access to the banking services and generate income for the low-income category group in emerging markets, that's a huge potential. So the way we look at it is most of the core research happens in the Western world developer markets, but your developers and your consumers are sitting in the Eastern markets. So there's a natural bridge in terms of researching on the best problems and sort of creating that flow of the good research and solutions so that these people across the emerging markets can be helped.
Yeah, very much what we're seeing in Africa, but it's always great to end off with a little bit of a controversial point. So for those of you who, like myself, are a little bit of a degen on the inside, a crypto degen that is, there's a lot of talk on Twitter about Operation Choke Point. The huge sort of regulatory and industry crackdown on the space from particularly the US market. And over the past few weeks, we've seen this spill over into the banking sector. So for those of you who don't know, Silvergate, Signature Bank, etc., these were the companies responsible for banking most of the crypto companies globally. And the fact that they've now shut down could potentially have a significant effect on the digital asset market. Let's start with Orbit. Do you think that is the case? And if so, what do you see that effect being?
I'd say most of our companies couldn't get bank accounts to begin with. So, we try and help, but it's quite difficult. So I think one of the things that you'll probably see is an acceleration in the market. On and off rails are very important, but I think you'll see actually an acceleration. The fact that people can't really bank very well should be overall net positive. Maybe not in the next 4 months. Next 4 months are going to be very tough, but over the long term. So for us, I think we're really focused on like how do you leverage technology for change, right? And so for example, like asset fractionalization, I think is going to be super huge. We're active in India. We have 55 portfolio companies in India, and people in India, like people in China and elsewhere, they love property. The problem is they can't afford to buy it, or if they buy one, they can't afford a second one, right? So one of our companies, they got one of 5 licenses that the other four are banks, and they're the only startup with a license, where they can basically do what they used to do with an SPV to buy commercial real estate, but now they can just put it on a smart contract. It's kind of boring, but boring stuff that makes money is a lot of fun and really exciting for us. So I think you'll end up probably seeing an acceleration, especially from the second half of this year.
Brilliant. Augusto, I'd really like your interesting take on this. Do you think that specifically this regulatory scrutiny in the US, the debanking of a lot of the crypto companies, do you see a lot of this playing into a regulatory arbitrage where many of those companies potentially, just because of the quality of the regulatory environment and banking relationships in the Middle East, do you see them coming to the region as a consequence of this?
Yeah, definitely. I mean, and again, it's not only for crypto. I mean, I think this is across all the sectors. But I mean, last year we have Abu Dhabi Finance Week, right? And honestly, I mean, the many people that flew in, we felt like the island sank a little bit, right? It was a lot of people there setting up, as you said, in Abu Dhabi. And it's not for one reason. I think it's the entire ecosystem. Now, this is a consequence of what has been happening in the last 3-4 years. So this is not new, right? The companies already know. It's hitting us, of course. And now what the companies are looking for is an ecosystem that they can operate domestically, but also internationally. And I believe, thanks to the infrastructure that Abu Dhabi has, the regulation that it has, the capital that it has, the stakeholders that they have, Abu Dhabi is becoming that ecosystem where they can or they might operate internationally.
I completely agree. So unfortunately, we've run out of time, but thank you so much to the panelists. It's been an exceptionally interesting conversation. Hopefully you've enjoyed it. You know where to find these people afterwards. And can we just have a round of applause for our panelists?
Thank you.